All right, let's dive right in. We're talking about India's huge 2025 tax reforms. And this isn't just about numbers on a spreadsheet. We're going to break down what this actually means for everyday people, for some major industries, and yeah, for India's massive ambition to climb the ranks of the world's economic superpowers.
Just think about it for a second. What if you didn't have to pay a single penny of income tax on your salary? Sounds pretty amazing, right? Well, for millions of people in India's middle class, that dream just became their reality, and it's at the heart of this giant economic experiment we're about to unpack.
So 12 lakh rupees, that's the magic number. For those of you wondering, that's roughly 14,000 US dollars. And here's the big headline. If you're earning up to that amount under the new default tax plan, you pay zero, absolutely nothing in income tax. This is, and I'm not exaggerating, a seismic shift. The whole idea is to put a huge amount of cash right back into people's wallets.
Okay, so how did this happen? Well, this whole no tax thing didn't just appear out of nowhere. It's actually one piece of a much bigger puzzle. The government launched this two-pronged attack, if you will, to totally overhaul India's tax system. And it hits everything, from the money you earn in your salary to the stuff you buy at the store.
Yeah, they really went for it, tackling two things at the same time. On one hand, you've got the GST, the goods and services tax that's on pretty much everything you buy. They made that a whole lot simpler. And then, on the other hand, they took a big axe to personal income tax rates for a huge chunk of the population. A double whammy.
And that simplification part is key. You see, before this, India's GST system was, well, it was a mess. You had 4 different tax levels, and it was just a headache for businesses, and honestly confusing for anyone trying to buy something. So what they did was get rid of 2 of those slabs. The 12% and the 28% ones are gone. Now, you're left with just 2 main rates. The idea is simple. Make it clear, make it easier, and hopefully get more people to actually follow the rules.
Okay, let's bring this down to earth. What does all this tax talk actually mean for the average person? Well, the impact starts in the place you feel it most, right in your wallet and in your shopping cart every time you go to the store.
And this is where it gets real. Look at this list. We're talking about stuff you buy every single week. Soap, shampoo, toothpaste, snacks. All of a sudden, they got cheaper because they were dropped into that lower 5% tax bracket. And some things, like certain kinds of milk and paneer, are now completely tax-free. That's an immediate, tangible difference.
And remember, that's just one side of the coin. That's the savings on what you buy. Now look at what you earn. For someone making that 12 lakh rupees a year, they're now saving something like 80,000 rupees annually that they used to pay in taxes. That is a serious chunk of change freed up for families to spend, to save, to invest, to do whatever they want with it.
So what happens when you give millions and millions of people more money to spend all at the same time? You get a massive wave that washes over the entire economy. And, as you'd expect, that wave creates some pretty big winners. Let's take a look at who's riding it.
First up, real estate. The construction and housing sector got one of the biggest boosts of all from these reforms. And it really boils down to one single crucial building block. And that game changer was cement. The tax on cement was slashed from a massive 28% all the way down to 18%. Now, if you know anything about construction, you know cement is a huge part of the cost. So this one move directly makes it cheaper to build everything, which could mean more affordable housing and just a huge shot in the arm for the whole industry.
The car industry is another really interesting one. It's like the government created 2 different lanes. In the fast lane, you have the mass market, motorcycles, scooters, small family cars. They got a huge boost, with taxes dropping from 28% to 18%. But then, in the other lane, some high-end luxury cars got hit with a brand new 40% tax. It really tells you a story about who these reforms are aimed at.
Okay, now let's talk about insurance. This sector also got a huge helping hand from a really simple but super powerful rule change. Get this, they completely eliminated the 18% GST on all life and health insurance premiums. Just gone. Think about that. An instant 18% discount. That is a massive incentive. And the goal is pretty straightforward. Make it cheaper so more families can afford to get the financial protection they really need.
All right, so we've seen the small ripples, right? An individual's wallet, a specific industry. But what happens when you add all those ripples up? Well, they don't stay ripples for long. They combine into a tidal wave that's lifting the entire national economy and speeding up India's rise on the world stage.
The speed of India's climb is just incredible. Think about it. A decade ago, it was the 10th biggest economy in the world. 10th. Fast forward to 2025, and it's already leapfrogged Japan to take the number 4 spot. And the target is clear. Number 3 is next, and it's not far off.
And what's fueling this climb? Just pure, incredible growth. Take a look at these numbers for the first quarter of the fiscal year. India's economy grew by 7.8%. Now look at China, look at the US, it's not even close. This is what's cementing India's reputation as the fastest-growing major economy on the planet, period.
Okay, but let's be realistic. All of this good news, these tax cuts, this stimulus, it doesn't come for free. There's always a cost. Which leads us to the trillion rupee question. How is the government possibly affording all this?
And the price tag is pretty hefty. The immediate hit to the government's bank account is huge. We're talking about almost 1.5 trillion rupees a year in lost revenue from these tax cuts. To put that in perspective, that's around 0.5% of the country's entire economic output. That's a big hole to fill. So what's the big idea? Is it just a massive giveaway? Well, no. The government's line is that this is a vote of confidence, reposing faith in the middle class. It's a huge bet. The theory is, if you give people more of their own money back, they'll spend it, they'll save it, they'll invest it. And all that activity will make the whole economic pie grow so much bigger that even with lower tax rates, the government will end up collecting more tax money in the long run. But that's the long game. What about right now? You still have that trillion rupee hole in the budget. And this is how they're plugging it. For now, they're leaning really heavily on money that isn't from taxes. We're talking about massive dividend payments from the central bank and other big government-owned companies. It's like using your savings to cover your expenses while you're waiting for a big raise to kick in. And here's the tightrope walk. Even while making these huge cuts, the government is promising to be responsible with its spending. They're still aiming to shrink their budget deficit. That's the gap between what they spend and what they earn. This is a big signal to the rest of the world, to investors, saying, hey, we're stimulating the economy, but we're not going to be reckless about it. So when you boil it all down, what you have is one of the biggest bets a country can make, a bet on its own people, a bet on the middle class. Will this be the calculated risk that ignites India's economy and solidifies its place as a global superpower? Or is it a high-stakes gamble that could backfire and strain the country's finances? We don't have the answer yet, but you can be sure the entire world is watching to see how this plays out.